You're about to dive into a story of epic proportions, a true David and Goliath struggle in the healthcare world. Centene Corporation.
Hmm.
Is it a 40% crash or a 100% comeback? You won't believe what we uncovered.
Yeah, this isn't just about numbers. It's really about the future of healthcare and, what happens when the unexpected truly shakes a giant.
You're with Channel Desk. This is your analysis. For this deep dive, we're dissecting a recent analysis that meticulously details these dramatic shifts in Centene Corporation's market position.
And right up front, this is important for you, our listener. It's crucial to remember. This deep dive, well, yes, it's meticulously researched with AI, web research, expert analysis. It's not personalized investment advice, okay?
Right.
Always consult a licensed financial advisor. And while we believe all this data is accurate, Channel Desk assumes no liability for errors or investment losses. And you know the drill.
Oh.
Past performance doesn't guarantee future results.
Got it. With that clear, let's unpack this incredible situation and see what's truly going on with Centene. We're diving right into the heart of their business. So, who are they? What makes them tick? And what exactly just went wrong?
Okay, so Centene is the largest pure-play managed care provider. They're deeply, deeply embedded in U.S. government programs.
Pure play meaning mainly just this one type of business.
Exactly. They basically generate revenue through per-member premiums, administration fees, and they have to carefully balance their medical cost ratios. And crucial elements like risk adjustment transfers, that's, balancing costs for sicker members between plans and state capitation rates, the fixed payments per enrollee. It's complex.
And their revenue mix just shows how tied they are to government stuff, right? 62% from Medicaid,
62%, yeah.
23% from the ACA marketplace, and 15% Medicare and other bits for FY 2024. Think about this. They serve over 131 million Medicaid lives, 21 million ACA exchange, and 33 million Medicare Advantage lives. That scale is just staggering.
It absolutely is. But despite that immense scale, the company, well, they hit a major snag.
Okay.
The sudden crash came from really unexpected news. A significantly higher number of sicker than expected enrollees joining their ACA marketplace plans.
So costs went way up.
Way up.
Yeah.
Drove up their medical costs far beyond what they planned for.
And here's where it gets really interesting. Centene themselves announced next year's profits would be like $2.75 lower per share than planned.
Yeah, a huge cut.
And they literally said they no longer know what 2025 will look like. This is insane. Their shares just plummeted right from the mid-50s down to the low 30s.
In just one session. A brutal market reaction.
Wow.
And beyond these internal issues, they're also navigating broader economic and policy currents. They've got higher policy rates hitting portfolio yields.
Okay.
Inflation, medical CPI at 4.8% year over year. That's accelerating costs too. And policy shifts like the BBBA Act.
The Build Back Better Act.
Right, that's trimming $1 trillion from Medicaid over 10 years. Plus, all the uncertainty around those enhanced ACA subsidies ending. It's all adding major pressure.
So, okay, zooming out. What does this mean for the whole managed care market and Centene's place in it?
Well, the overall space is massive, as you said. 131 million Medicaid, 21 million ACA, 33 million Medicare Advantage lives. Growth is shaped by, aging demographics, Medicaid redeterminations.
Yeah, right.
But CMS, that's the Centers for Medicare and Medicaid Services, they project a 3.3% compound annual growth rate in national health spending right through to 2030. So it's a huge growing market, but clearly it comes with some big, big challenges for a company like Centene right now.
Okay, so after that massive plunge, the big question is, well, what's the stock been doing since then? Let's trace this volatility roller coaster.
Yeah, roller coaster is the right word. Following that press release in July 2025, where they just pulled their 2025 guidance.
Which is a huge deal.
Oh, massive. The volatility spiked dramatically. Their 12-month rolling volatility hit 53.2%.
53%.
Yeah, compare that to the sector average, which is around 22.4%.
Yeah.
It just screams market uncertainty about their future earnings. And it hasn't really calmed down since.
Wow. The chart really paints a picture of a stock under, well, immense pressure. It's trading way below both its 50-day and 200-day moving averages. That's a strong bearish signal, right?
Definitely a bearish trend indicator.
Oh.
But there might be a glimmer of hope, technically speaking.
Oh.
Yeah, the recent price action, it suggests potential support is forming around that $28 to $32 range.
Okay.
Looking at the technicals, the current price versus the 50-day moving average is down 42.3%. Against the 200-day, it's down 48.7%. Huge drops.
Yeah.
But the RSI, the Relative Strength Index, it's at 28.5. that's technically oversold territory.
Meaning it might be due for a bounce?
It suggests a potential rebound if sentiment shifts, yeah.
Yeah.
Though the MACD signal, another indicator, it's still bearish. So it's just definitely a challenging technical picture. But that oversold condition is, well, it's noteworthy.
For those tracking, this truly highlights the extreme market reaction. And hey, if you're finding these deep dives valuable and want to stay ahead, seriously, hit that subscribe button.
Yeah, do it.
And let us know in the comments what other complex topics you want us to unpack next. Okay, so with such a dramatic price drop, the immediate thought for many investors is going to be, is this a buying opportunity?
Exactly.
What do the valuation metrics actually tell us? Is it cheap?
Well, that's the million-dollar question, isn't it? Centene's PE ratio is, get this, a mere 4.48.
4.48? That's incredibly low.
It's not just cheap, it's basically screaming market fear. For context, right, the sector median PE is much higher, usually 12 to 17 times earnings.
Wow.
You look at United Health, they're at 12.15, Elevance 13.35, Molina 10.39, Cigna 16.84.
Okay.
So the real insight here isn't just that it's cheap, but why the market has priced it so aggressively. It's like they've built in a worst-case scenario already. Whether that actually happens, well, that's the gamble.
So on paper, yeah, it looks incredibly cheap. What are the experts, the Wall Street analysts, saying about this potential bargain?
Well, the average 12-month price target from analysts is $58.63.
$58.63 from where it is now.
Yeah, suggesting a whopping 93% upside from current levels. If they're right, that's a pretty significant vote of confidence from some of them.
But not everyone agrees. And this is what makes it a real debate, doesn't it? We've got some interesting quotes here. Mizuho, on July 11th, 2025, they noted that withdrawing guidance erodes credibility, but valuation already discounts a halving of EPS.
Right. So they're saying the market's already priced in a lot of the bad news.
Seems like it. Then you have Morgan Stanley, July 8th, warning that adjusted EPS could fall to $3.78 if risk pool trends persist. So a much more pessimistic view there.
Definitely highlighting the potential downside if things don't improve.
And then on the flip side, you've got Truist, July 16th, countering with, we still see a pathway above $7 EPS by 2027 once pricing resets.
So they're looking further out, past the immediate storm.
Exactly. So there's this real tug of war among the big players. Is it deep value or is it a trap, a continued slide?
That's the core tension right now.
So what's next for Centene then? Let's talk about the major hurdles, the headwinds they're facing, and crucially, are there any potential tailwinds? Anything that could actually turn things around?
Okay, headwinds first. There's the continued medical cost inflation, which keeps outpacing their premium growth. That's a big one.
Right.
And significant regulatory concerns. We talked about them, but the potential expiry of those enhanced ACA subsidies after 2025, that's arguably the most critical. It directly impacts, what, 23% of their current revenue?
Yeah, huge chunk.
Huge. And the BBBA Act's Medicaid cuts, that $1 trillion over 10 years, another major structural challenge.
Plus, there are execution risks, right? Like, what if they get delays in state approvals for their 2026 rates?
Exactly. Or a potential S&P downgrade to junk status. Yeah, that would obviously raise their cost of capital significantly. So it sounds like a lot of pressure from all sides.
It really does.
It is. But there are also potential tailwinds. They do have the ability to reprice those 2026 ACA premiums to reflect the higher morbidity, the sicker pool.
So they can adjust.
They can adjust, which could restore some earnings power.
Right.
There are ongoing Medicaid rate renegotiations, too, which might offset some of those BBBA cuts in key states. And if they can stabilize their leverage, their debt, there's potential for share buybacks to resume. That could be a positive catalyst for the stock.
Okay, so looking at different scenarios, the analysis suggests if earnings per share somehow increase by 20% from estimates, you could see maybe a 25% stock return. But if EPS falls by 70%,
which Morgan Stanley hinted at as a possibility,
then we're looking at a potential 50% stock decline from here. This just highlights the extremes we're talking about. Stick around, this gets wild.
It absolutely does. This really makes Centene a high-risk contrarian long opportunity. It's suitable maybe for a small tactical allocation, perhaps around 3% in a diversified portfolio, but only for those with a really high-risk tolerance.
And that support level you mentioned.
Yeah, that $28, $32 range is seen as key support. It lines with like 0.25 times forward sales and a very low 3 times EBITDA.
EBITDA being enterprise value to earnings before interest, taxes, depreciation, and amortization.
Correct. Basically showing how cheap it is relative to its operating cash flow. Resistance, where it might struggle to go higher, is expected around $42 that's the midpoint of that big gap down, and then maybe $60, which was its level before the crash.
And for anyone actually interested in this kind of, volatile play, the analysis suggests maybe setting a 15% trailing stop loss.
Yeah, to limit potential downside.
And even hedging, like going long United Health and short Centene as a pair trade.
It's a relative value approach, yeah. Betting that United Health might outperform Centene regardless of the market direction.
Yeah.
Importantly, remember, no dividend here.
Right, so any gains are taxed as capital gains. Okay, quick break here. If you're learning something new or having an aha moment, smash that like button. Seriously, it helps us know what kind of deep dives resonate with you.
Please do.
All right, so we've broken down the situation using the key insights from our analysis. Let's try and bring it all together now. What are the absolute core opportunities and the biggest risks here for you, the listener, to really consider?
Okay, opportunities first. The massive valuation discount is number one. Trading at 4.5 times trailing PE, that's an 80% discount to its own 10-year average and the sector median.
80% discount.
It offers substantial upside if management can navigate these challenges. Yeah. And that repricing opportunity for 2026 ACA premiums is key. Analysts think that could restore earnings power, maybe get them back on a path above $7 EPS by 2027.
Okay, so huge potential upside based on valuation and pricing power. But the risks, they seem equally clear, maybe even more immediate.
Absolutely. Immediate and significant. The withdrawal of the FY 2025 guidance tied to that $1.8 billion ACA risk adjustment shortfall. Yeah. It just creates immense near-term earnings uncertainty.
And damages credibility.
Massively erodes management credibility. Then you have those pervasive regulatory headwinds. And we keep mentioning the BBBA Medicaid cuts, the potential expiry of enhanced ACA subsidies.
Yeah.
That affects, 62% of the revenue stream combined? Huge exposure.
So yeah, definitely a high-risk, high-reward situation. If people want to track this story in real time, what specific things should they be watching out for? What are the key indicators?
Okay, good question. Keep a close eye on the net risk adjustment receivable trend from the CMS releases. That shows how the ACA risk pool is actually developing.
Got it.
Watch the pace of Medicaid redetermination disenrollment compared to what they've estimated. Are more people losing coverage than expected?
Right.
Track the critical state-level filing approvals for their 2026 ACA rates. Do they get the price increases they need? And also, watch their credit default swap spread relative to the BAML Managed Care Index, the Bank of America Merrill Lynch Index.
And what does that tell us?
It basically signals the market's perception of their credit risk. Is it getting worse or better compared to peers? These indicators, they'll give you real-time insights into Centene's actual trajectory, beyond just the stock price.
Okay. So we started the deep dive asking, Centene, 40% crash or 100% comeback. After unpacking all this, what really stands out to you now? I mean, the core business is massive, right? But the headwinds are fierce. Credibility is a huge hurdle. Is this the moment of maximum pain before a potential rebound, or is it just the beginning of a really prolonged struggle for this healthcare giant?
It's such a textbook example of a company facing immense pressure from so many different angles. Mm-hmm. You've got significant downside risk, clearly, but also potentially explosive upside if things turn. I think understanding the nuances, the specific regulatory details, the technical signals, the market psychology driving that low valuation, that's absolutely key here. It's about navigating the complexity, not just reacting to scary headlines.
Well said. This has been another deep dive into the heart of a fascinating and definitely challenging topic brought to you by ChannelVest. Don't miss out on future insights. Subscribe and follow @ChannelVest on YouTube for real-time updates on market insights and other high-potential analyses.
Yeah, definitely subscribe.
We love hearing from you, so please share your thoughts on Centene or anything else in the comments below.